Good morning. The motormen strike may have thrown Mumbai out of gear, but the bulls are ready to chug ahead. The engine, of course, is the strong global cues. US stocks rallied on the back of strong economic reports. Multi-billion-dollar mergers and acquisitions are back, which can be taken as a good tiding as well. Europe too recovered from the Greek woes. Asian markets are mostly up, though China markets are down following last week's monetary tightening. Volume may be hit due to the railway motormen strike. Suddenly, thousands of opportunities may appear to come your way, but make sure that you do not get carried away. Tuesdays are often infamous to start one way and end the other way. Despite the positive outlook for the day, the overall prospects appear to be rather murky in the near term. The key indices may have been choppy and range-bound for several weeks, and that trend may not change for some time now. Jindal Steel and Syndicate Bank will announce its results today. Meanwhile, the Greek storm has subsided, at least for now. Hopefully, the massive European Union IMF bailout over 3 years will help Greece take a deeper look at what went wrong. For the time being, though, the rescue has soothed frayed nerves over a possible sovereign default. Still, some worries persist over the health of the other members of the PIGS nations. The Greece issue also shows how the stimulus-driven efforts to tame the recession can boomerang. Moral of the story, heavy deficit-ridden government balance sheets need urgent repairs. The euro slid as investors shrugged off all positives, including agreement over fiscal aid for Greece and stronger than expected manufacturing activity in the eurozone. Some fears are still lurking that the bailout package for Greece may face political hurdles and whether the debt-stricken nation can stick to tough austerity measures. The other news for the day is, at the end of the 20th day of the auction, which began on the 9th of April, the provisional winning price for Pan-India license stood at 103.5 billion rupees, up 195.6% from the 35 billion rupees reserve price fixed by the government. The Finance Ministry plans to exempt large unlisted companies from the proposed 25% minimum public holding norm to ensure that it does not discourage them from going public. Companies can now close their public issues on different days for QIBs and retail investors, with capital market regulator SEBI having amended the guidelines relating to share issues. RBI survey pegged inflation at an average of 6 to 6.9% in the current fiscal. RBI on Monday took exception to some NBFCs for investing in overseas ventures without permission and asked them to seek its approval before pumping in money abroad. Sugar output up by 15% in Maharashtra in financial year 2011. The personal care segment in India is about to witness a flurry of activity, with ITC and Dabur India chalking out strategies to take on competition, increase market share and expand distribution network. Hindustan Motors plans to report itself to the BIFR as its net worth has eroded by more than 50% during the past 4 financial years. State-owned hydroelectric utility firm SJVNL's IPO was subscribed over 6 times, with the retail portion being subscribed nearly 2 times. Temasek Holdings brought out NYSE Euronext's 5% stake in the National Stock Exchange for around $150 million. Moving on to the recommendations, the derivative strategies are: Long Noida Toll Bridge Company Limited may future at Rs 33.65 for a target price of Rs 35 and the stop loss is to be placed at Rs 33. And Long Rural Electrification Corporation Limited may future at Rs 260 for a target price of Rs 275 and the stop loss is to be placed at Rs 250. Thank you and have a great day ahead.